Welcome back, beautiful and amazing human beings. And as you know, just a few days ago, we did a deep dive insider video into gold. And that's why in this one, we're going to be talking about silver. Man, these things are heavy. As of course, the global economy is on shaky grounds. As of course, the U.S. Federal Reserve tries to reassure you that everything is awesome and very stable, which of course is leading many people to flock to precious metals. And to talk about that plus a lot more, we have Keith Neumeyer. He is the CEO and founder of First Majestic Silver. And so Keith, thank you again so much for joining us. How are you, and how are you dealing with all of the stability going around the world right now?
Instability, I gather you mean. But yeah, look, it's pretty interesting times. You know, I've seen many market calamities in my 35 year career in this dealing in financial markets, and this is just one more interesting one to chalk up.
Interesting is definitely one way to say what's going on right now. And when we're looking at silver, we really see a lot of news headlines right now. And I kind of wanted to run some by you and see what you think, since you're kind of a silver and gold kind of insider. But we have this first article here by Kitco that says gold, silver prices up on anxiety ahead of Trump pressure on China. The second article, Commerce Bank, silver is currently in greater demand than gold. And a third article, silver price forecast, silver markets break major handle. What are you seeing on the front lines of the silver market? And do you agree with some of these headlines that come up as soon as you just type in silver?
Well, quite honestly, Luke, by the way, nice meeting you. Headlines unfortunately drive markets. Fundamentals or supply demand, fundamentals, do over long periods of time, of course, and that's what makes silver such an intriguing investment. And that's why I put together First Majestic Silver, is because my view on supply demand fundamentals of the metal, and we can talk about that as we get into this interview. But when it comes to headlines, that does drive markets. The S&P could be up 50 points, and the Dow can be up 500 points based on a tweet from Donald Trump, and it's very unusual times we're in, and quite honestly, I don't think it's particularly healthy to be following headlines to make investment decisions.
Yeah, if there's anything that really has been coming true to fruition in 2020 is that you can't really rely, especially on the mainstream media, especially with everything that you are seeing out there. But getting into some of the kind of fundamentals here, we have been seeing a lot of talk about the gold-silver ratio. Not a lot of people know what it is, but people are saying that the trend is coming lower. Can you explain to people what it is? And do you see this being a possibility unfolding in this kind of crazy market?
Yeah, so over the last 100 years, and look, you can go back even further, excuse me, but the ratio has been anywhere from, as low as, the low teens, up towards 100. And what that means is the trading ratio. So what you see in your daily quote, you divide gold by the silver price, and you come up with the ratio of how they trade. And it's interesting, back in the 70s, when the COMEX was first allowed to issue futures contracts in the silver market, that relationship, a long-standing relationship of this sub 20 to 1, more like 15 to 1 ratio was really the norm. But once the banks got involved in the 70s into the 80s, where they actually used hedging strategies to hedge metals and take on large short positions to supply commercial users, because silver is a commodity that's critical for the human race. We couldn't even be doing this call without silver, and then everything you do, whether you're sleeping or walking the streets, you need silver in your life. If it wasn't there, your life would be dramatically different than it is today. And a lot of people don't understand that, but nevertheless, we end up following these headlines, and maybe I got a little bit off track, but we have a mining ratio of 8 to 1. So for every 1 ounce of gold we're mining worldwide, we're only mining 8 ounces of silver. The ratio is by the scientists say that in the Earth's crust, there's approximately 15 or 16 ounces of silver for every 1 ounce of gold. So that's kind of the natural ratio. And up until the 70s, that ratio, as I said earlier, kind of broke down. And since then, we've seen this, 60 to kind of 80 range, from the 80s into the early 2000s or early 2010s. That ratio is even broken down even further in March of this year, whereby the ratio blew out to something in the order of 120. I think it actually hit close to 130 an ounce, and that is absolutely unprecedented. We also saw, don't forget, oil prices trade at negative $40 a barrel. So, it was around that same time that we saw this complete, disconnect. So it's got to be somewhat ignored as an anomaly. But quite honestly, you're right in your question, Luke. That the ratio should get down to more like its natural ratio of at least 15 to 1, and I think it should go to its mining ratio of 8 to 1. And at $1,700 gold, that's triple digit silver.
Yeah, it's been really interesting because during this kind of economic calamity, we even seen major financial institutions like Bank of America going to and promoting bullion. Obviously, there's been a lot of disruptions of industries. Obviously, a lot of people are affected or are expecting a lot of bigger effects of that. But how do you see this kind of play out in the market in the long term? Since, of course, some people are saying there's going to be a V shape, a W shape, a U shape, economic impact recovery. How do you see this kind of unfolding from here, from your years of expertise looking at the financial situation very closely?
Yeah, well, you got a couple of questions in there. I'll try to answer two or three of them. But I guess, I look at this as the 1929 to 1933 timeframe. V shapes. Of course, the market's counting on a V shape. That's why we've seen the S&P blow through 3,000 the last couple of days. Got all the way down to 2,200 or something, or 2,300 from 3,300 or thereabouts. So it went down, somewhere in order of 30-35% in March, and it's recovered a substantial amount of those gains. But if you look at 1929, early 1930, the same type of retracement occurred. And then from over the next 3-year period, the major U.S. markets went down, substantially, around 80%, if you go look at the charts. So I think that's kind of what we're going to see here going forward. This V-shaped rally, I think that's fantasy, because, how do you put 40 million people just in the U.S. back to work? And that's just the U.S. Look at globally, the devastation that's occurred around the planet. It's going to take 5 to 10 years to correct, this devastation that's occurred. And the governments are printing scad loads of money. Interest rates are going lower. We're likely going to see negative interest rates in the United States, which would be, quite honestly, crazy, but I think we're going to see it. And that's going to put a bid under silver and gold, even more than we're currently seeing. So I'm an extreme bull on silver and gold. I think this is a perfect time, to be getting into these metals. And if you go back and look at 1930 to 1933, the best performing stock, I believe, was Homestake Mining. And it got taken out years later, I think, by Barrick. But nevertheless, the miners did very well during that 1930 to 1933 timeframe, when the rest of the economy was doing quite poorly.
Now, with the breakdown of the supply chain, how has your industry been directly affected? How has the mining industry, because I've been hearing there's been a lot of problems with, of course, shipping. There's been a lot of problems with even just getting your hands on silver. A lot of top websites have a long delay and also a big markup. We see one price in the market, we see one price online, and then we see another price when you actually try to get your hands on physical silver and other metals. How do you think this disruption, how can you classify it, and where do you see it going?
Well, look, the supply constraint that you're referring to is a function of what the retailers were willing to carry as inventories. Prior to 2020, and even prior to 2019, these retailers who, we rely on to supply us metal. If you want to go down to your store and buy, a 1 ounce gold coin, or 21 ounce silver coins, there's a market for that, and you know where to go. And then and then many of us do it, including myself. And But inventory costs money, and these small businesses, aren't going to have millions and millions of ounces of inventory in their vaults because it just doesn't make financial sense. So all of a sudden, when demand spiked, and it really started spiking last year, and it really hit kind of a calamity over the last couple of months where supply just ran out. These retailers or these distributors of the metal weren't filling up their warehouses more as quickly as they probably should have in hindsight. And they didn't expect this huge demand was going to come into the system, and all this retail product was just wiped out and it was all sold. First Majestic sells silver on our website. We part of our business is selling to the retail market. So we're plugged in. We know exactly what's going on out there. We deal with the mints, we deal with the refineries, we deal with the general public in this part of the business, and we know that the supply just disappeared. So because of the uncertainty when the supply was going to come back, because these retailers were contacting all the mints and contacting their supply chains looking for metal, finding out there's nothing there. So they had to put these huge premiums. In some cases, I saw premiums of $5 or $6 an ounce. And because the retailers don't want to take the financial risk, they know it's going to take 2 to 3 months for them to get that supply back into their inventories in order to supply the demand. And so they put this huge premium on it to buffer them of any potential financial loss. So that's what created the premium. And over time, as all these warehouses start to get filled up again, these premiums will get reduced. But it just shows you how tight this market is. The silver industry is in approximately a 200 million ounce deficit a year, and has been that way for multiple years over the last 30 years. The miners produce on a worldwide scale just over 800 million ounces of silver per year, and the consumption, 70% is industry, but the world consumption is about 1 billion ounces of silver. So there's this 200 million ounces that's got to come from somewhere. And that's coming from investment hoards, which are quite honestly being depleted at a rapid rate. And the premium that we're seeing in the space right now is showing you exactly what's happening.
How was your company, First Majestic Silver, affected by all of this?
Well, I guess I'm not sure if it's positive, but we were selling, or we are selling some of our metal at fairly substantial premium due to the supply issue. But unfortunately, we did have to shut down our mines back in March and April, and that was very disruptive. We took our guidance away because we just simply didn't know when the mines would get back up and running again. We now are starting them up, which is fantastic. So Q2, our second quarter is not going to be the greatest quarter in the world because it's just there's not a lot of revenue coming in from the sale of metal. Q1 was a great quarter. Q3, Q4 were good quarters. We expect to be back up and running by 100% in July, at least that's what we're hoping. And so we should have a pretty good Q3 and Q4 ending 2020 on a pretty positive and strong note.
Now, of course, you don't have a magic 8 ball, but there's a lot of writings on the wall, especially with the Federal Reserve, especially with them just pumping stocks right now and the stock market being high. Even though there's a lot of signals, there's a lot of real life situations that, of course, signal not a strong economy, to say the least. Where do you see silver going from here in 2020, in 2021? Some people are saying $20 an ounce. What do you think from your kind of pulse on the situation?
Well, $20 an ounce is a bit of a joke. I would expect it would be considerably higher than that. I'm a bull. I'm probably one of the more vocal advocates of silver out there, and I'm on record by saying I'm expecting to see triple-digit silver, which means north of $100 an ounce. And I do believe that, honestly, that will occur. People, there's lots of other people out there that maybe not agree with that statement, but I look at supply demand fundamentals. I think ultimately supply demand trumps headlines, and headlines are driving the markets. That's why we've seen this huge, as you just mentioned, this huge run up in the U.S. markets, expecting this V recovery and everything's going to get back to normal again. Look, which could happen, I suppose. I'm not expecting that's going to happen, but definitely that's what the market's going to happen. I think that with all the money printing, the low interest rates, and likely lower interest rates, and all the governments working together to try to float this economy. And that's going to be very positive for precious metals, gold and silver. And whether silver goes to $20 or $30 or $100, who knows really? We don't have a crystal ball. I'll stick to my guns and call triple digit silver over the next 3 to 5 years. Whether I'm right or wrong, only time will tell. But what I'm pretty confident about is that you need to have, in my opinion, gold and silver in your portfolio, either in the form of physical metal or in the form of mining shares.
Keith, thank you so much for joining us and giving us all the insider information on silver. Where can people find out more information about you? Where can people join you?
Sure. Well, I'm on Twitter, Keith_Neumeyer. Look me up. I don't tweet a whole bunch, but I do, keep people interested, or at least, things that are coming out in the mining sector or the metal sector I do put out. FirstMajesticSilver.com is a website. Please download the presentation. First Mining Gold is the company, my gold company, that also has a website. Go have a look at their presentation as well.
Keith, thank you so much for joining us and sharing your wealth of information and knowledge for so many years in the industry. I hope you guys enjoyed that video. If you did, share it with your friends and family members. And because of you, I'm still here. And this is why I love you guys. Stay tuned for more here on wearechange.org.